December 5, 2025 at 3:58 a.m. GMT plus 5 3-minute read. Stablecoins have the potential to broaden individuals' access to financial services, but that may come at the cost of central banks, according to the International Monetary Fund. In a 56-page report published on Thursday, the international organization identified currency substitution as a potential risk that stablecoins pose, describing the dynamic as something that could incrementally erode the financial sovereignty of various nations. Historically, if an individual wanted access to the greenback, they would typically be required to hold physical cash or open a certain type of bank account. However, stablecoins can penetrate an economy rapidly via the internet and smartphones. The IMF noted the use of foreign currency-denominated stablecoins, especially in cross-border contexts, could lead to currency substitution and potentially undermine monetary sovereignty, particularly in the presence of unhosted wallets. The organization added, a central bank would have less control over domestic liquidity and interest rates if a significant share of economic activity were to transition away from the respective currency. The IMF said, if foreign currency-denominated stablecoins become entrenched through payment services, local alternatives like a central bank digital currency, or CBDC, could have difficulty competing. The report stated, unlike privately issued stablecoins, CBDCs are a digital form of sovereign currency that is issued, monitored, and managed by a central bank. BlackRock remains risk-on as mega forces like AI. Stablecoins transform financial markets. The organization noted that stablecoin holdings in Africa, the Middle East, Latin America, and the Caribbean are rising in relation to FX deposits that help central banks influence monetary policy. However, the IMF acknowledged that currency substitution is often motivated by a sense of survival, including stability for citizens in countries where inflation runs high. At present, stablecoins, dénominated nu et dollar compris 97%, of the $311 billion sector, according to crypto data provider CoinGecko. Stablecoins denominated in euros, for example, were collectively worth $675 million, while $15 million worth were linked to the Japanese yen to safeguard monetary sovereignty. The IMF recommends that nations implement frameworks preventing digital assets from being recognized as official currency or legal tender. That status would prevent people from being able to refuse digital assets as a form of payment. IMF warns, fragmented stablecoin rules create roadblocks, new guidelines released. With major economies like the EU and Japan establishing their own frameworks, the IMF warns that uneven rules and regulatory fragmentation threaten financial stability and global integration. Hassan Shiddu. Friday, December 5, 2025 at 3:53 a.m. GMT 5 3-minute read. The International Monetary Fund on Thursday released a new global assessment of the stablecoin market, warning that fragmented regulatory frameworks across countries are now creating structural roadblocks that threaten financial stability, weaken oversight, and slow the development of cross-border payments. In its report titled Understanding Stablecoins, the IMF reviewed how major economies, including the United States, the United Kingdom, the European Union, and Japan, regulate stablecoins and found that national approaches remain widely inconsistent. While some countries treat stablecoins as securities, others regulate them as payment instruments, permit only bank-issued tokens, or leave large parts of the market unregulated. Stablecoins are moving faster than regulators can track, IMF warns. The IMF said this regulatory patchwork allows stablecoins to move across borders faster than oversight can follow. Issuers can operate from lightly regulated jurisdictions while serving users in stricter markets, limiting authorities' ability to monitor reserves, redemptions, liquidity management, and anti-money laundering controls. The fund warned that this creates regulatory arbitrage and weakens global supervision. The report also pointed to technical fragmentation. Stablecoins increasingly operate across different blockchains and exchanges that are not always interoperable. According to the IMF, this lack of coordination raises transaction costs, slows market development, and creates barriers to efficient global payments. Differences in national regulatory treatment further complicate cross-border usage and settlement. Source: IMF. Stablecoins remain dominated by US dollar-denominated tokens. The IMF said the global stablecoin market is now worth more than $300 billion. Tether's USDT and Circle's USDC make up the majority of that supply. About 40% of USDC's reserves are held in short-term US Treasuries, while roughly 75% of USDT's reserves are in short-term Treasuries, with another 5% held in Bitcoin. The concentration of reserves in government debt markets link stablecoins directly to traditional financial systems. Widespread use of foreign currency stablecoins can weaken domestic monetary control, lower demand for local currency, and accelerate digital dollarization. Stablecoins also make it easier to bypass capital controls through unhosted wallets and offshore. In addition to monetary concerns, the fund cited broader financial stability concerns. Large-scale redemptions could force rapid sales of treasury bills and repo assets, potentially disrupting short-term funding markets that are below $104K as Israel strikes Iran. Israel said it launched a precise, preemptive strike to neutralize the country's nuclear program. By Sam Reynolds, edited by Stephen Alfer. Updated June 13, 2025. 1:10 p.m. Published June 13, 2025. 5:33 a.m. Unsplash. What to know? Bitcoin has tumbled to $103,900 as Israeli forces bomb targets in Iran, including the country's capital. Israeli Prime Minister Netanyahu said his country is aiming to remove Iran's nuclear program and ballistic missile capabilities, and that strikes will last until the threat is removed. Bitcoin, BTC, $92,568.75, substantially added to earlier losses, slumping to as low as to $103,162 as Israeli forces bomb nuclear and military targets in Iran, including in the capital Tehran, before recovering somewhat to trade to percent lower than 24 hours ago. Israeli Prime Minister Benjamin Netanyahu said the country attacked Iran's nuclear program and ballistic missile sites to roll back the Iranian threat to Israel's very survival, and that the strikes will continue until the threat is removed. JWP player placeholder. Story continues below. Don't miss another story. Subscribe to the Crypto Daybook America's newsletter today. See all newsletters. Enter your email. By signing up, you will receive emails about CoinDesk products and you agree to our terms of use and privacy policy. CoinDesk. The attack followed hours after the International Atomic Energy Agency said Iran was not complying with restrictions on enriched uranium for the first time in 2 decades. NBC reported that Israel was considering a strike following the Ejaz statement. U.S. President Donald Trump told reporters that he would prefer a deal with Iran and an attack could lead to a massive conflict.